Starting.
Great. All right. Welcome everyone to another Rocket Dollar webinar series. We're really excited about this one today. A long time coming because we've had a lot of customers really saying like, hey, can I invest in startups on the AngelList platform? So we're going to go through some intros in a second. John, why don't you introduce yourself?
Yeah, hello everyone. My name is John. I'm a lead at AngelList, where I'm really focused on identifying and building new ways to enhance the LP or investor experience. Prior to AngelList, I worked at some really large consumer goods companies and a late stage startup that had raised over $500 million worth of funding. But really excited here today to talk a little bit about AngelList and how you can leverage your Rocket Dollar IRA or account to invest in some really exciting startups.
Yeah, and Donna, why don't you give a little bit about your bio, but what's kind of exciting is that you're also a Rocket Dollar customer. So we were looking through a few of our own customers and we said, hey, who's already interacted with AngelList a lot? And we found Donna.
Yeah, here I am. Donna Harris. I'm based in Washington, D.C. I'm the general partner of two seed stage venture capital funds, active angel investor in a number of other venture funds not run by me or my team. And my focus is investing in companies that disrupt to democratize. We invest all over the United States and all over the world. And I'm a Rocket Dollar customer, and our fund is run on AngelList. So I feel like I've got one foot in each of these worlds and happy to answer any of the practical, what it's like to be a user and customer questions as we go.
Great. And we're going to have John pull up just a quick presentation on AngelList, but that's only going to be about 10 minutes. We really want the bulk of this webinar after that is really interactive Q&A. So we have some prepared questions we've thought about, but if you're in the audience, if you've ever invested on AngelList before or explored that with doing it with your IRA, or maybe you've looked into fundraising on AngelList, please feel free to bring that up. We've got some great experience on the call here today.
Perfect. So with that, I guess we can go ahead and dive right into the presentation. I think really excited to have everyone here today, really investing time into understanding how you can get involved with some really exciting startups at the very earliest stage. Big thank you to the Rocket Dollar team for organizing the event, and to Donna Harris as well. I think our GPs and our LPs are what make AngelList such an incredible community to be a part of. And so excited to have her perspective here today to share both on AngelList and Rocket Dollar. You've heard a little bit about me, but as Brendan mentioned, I want to talk through a little bit about AngelList. And with this, I want to start sort of from the beginning. AngelList was essentially created with really one goal in mind, and that is to increase the number of successful startups in the world. Every decision that we make as a company is really focused on this core mission. Really, all the products that we build and all the features that we ship stem back to how can we increase the number of successful startups in the world. Now, there's of course, a ton of different ways that you can go about doing this. Everything from helping startups to find talent, raise capital or funding, and even identifying some of their first few customers. On the AngelList venture side, we of course focus on really one of these pillars in particular. You can probably guess which one it is, but the capital side of this equation. Now, if we think about capital and the way that it's allocated to startups, it's changed a lot over the past 10 to 15 years. If we think about all of the capital that exists in the world, 10 to 15 years ago, it was allocated to a handful of venture capitalists throughout the world. And usually these venture firms would allocate it across to a number of different startups. And so this capital allocation process had almost like a natural choke point at which there was only a finite number of VCs who only had so much time in the day to actually be able to work with and meet with some really exciting startups. Now at AngelList, we really wanted to hone in on this point in particular and identify a way that we could expand the number of venture capitalists in the ecosystem. And we did this really by enabling founders and operators, probably like yourself, and equipping them with the tools to start venture firms of their own. Now, there's a couple of definitions that I think are just important to understand. The first being a limited partner, and the second being a general partner. Now, limited partners, some of you may be aware, or LPs, are the individuals who actually provide capital for funds to invest. Generally, it's a relatively hands-off role, but it's providing the capital to general partners who are actually the individuals that are allocating capital to startups. And this is a really important distinction, but at AngelList, we work kind of end to end to support both limited partners and general partners. And we'll talk a little bit more about these in detail as they come up. So feel free to drop in any questions that you have on the topics as well. Really want this to be an interactive presentation. And if anybody has questions, we can kind of talk through them live as well. Now, we have a base understanding of the limited partners and the general partners, which are most often the two parties involved with making a venture fund. But if we think back to the complexities of actually establishing a fund of your own, historically, it was incredibly complex. There's a number of legal, compliance, tax, regulatory, and administrative services that are necessary to establish a venture fund. Now, 10 to 15 years ago, this meant it might cost upwards of $1 million just to get started, which meant that you probably needed to have a fund size of about $10 million just to get off the ground and have the cost mechanics make sense. This meant that individuals would usually work at a venture fund of their own, potentially leave and bring with them an anchor LP, and this would sort of kick off the next stage of making a venture fund. Now, by the very nature of the way this is structured, it creates a barrier for individuals to do this on their own. Ultimately, this leads to fewer individuals who are allocating capital, which leads to fewer startups that are able to raise capital. And so what we did at AngelList is we rethought this approach. How could we take each of these different services and bundle them together so that with a click of a button, you could spin up a venture fund of your own? Now, this is generally from the general partner or GP perspective, but we offer a number of different products ranging from syndicates, which allow you to invest on a deal-by-deal basis, venture funds, which is generally your more traditional venture capital fund, but we brought that online, and then rolling funds, which allow general partners to actually enable LPs to subscribe to venture funds and commit on a rolling basis. This has led to some pretty significant changes over the past 10 to 15 years in venture capital. Today, things look really different. You log on to a platform and you're able to close into investments, raise funding, and actually sign for deals as well, all from directly on the platform. So something that may have historically taken place offline, this is a pretty major shift from what was previously possible. As we've grown as AngelList over the past few years, we've been incredibly fortunate to work with a number of really large institutional investors, ranging from Shrug to Bain Capital, Tiger Global, and more. To date, we have over $14 billion in assets supported. We've helped over 15,000 funds and syndicates launch. And last year alone, over 30,000 LPs deployed capital on AngelList Venture. Now, up until this point, I've kind of provided a brief overview of really what AngelList does and why we do it. What I want to focus on next as we sort of turn to the next page is this last point in particular, the 30,000 LPs that have deployed capital on AngelList, given this is probably most relevant for the individuals on the call here today. So just as a refresher and sort of a reset, LPs are the individuals or entities that actually provide capital for funds to invest. Generally, the obligations outside of this are relatively few, but to ensure that the GPs are happy and all the parties involved are happy as well, always important to provide the capital on time and in full. And depending on the level of deal, there may be some level of access or exposure to different startups in the fund's portfolio. So what does this exactly look like? Well, on AngelList, if you log on to our site, you can scroll through and view a bunch of different funds that are actually publicly offered. What we have here is a number of rolling funds, and you can go ahead and just click on one that you're interested in, read through that specific deal memo. We have Donna's here particularly. And just like that, when you're ready to invest, click apply now or commit to that specific deal. This is a really inclusive and cohesive end-to-end experience for LPs and GPs as well. So once you've actually identified and discovered a deal that you're interested in investing in, the next stage is adding your entity to the platform. Now, one piece with AngelList is we like to offer the flexibility to invest through all sorts of different entities, ranging from your personal investment entity to companies, trusts, and IRAs. A big focus point for, I think, the conversation here today is how can I leverage my retirement or tax advantaged accounts to invest on AngelList? And this part is really important as we're thinking through the best way to structure these legal entities. And I will talk and cover this in a little bit more detail, but in the event that you are looking to leverage your retirement funds, utilizing something like a checkbook IRA can really streamline and simplify this process. Once you've added the entity, it's really as simple as that. Thereafter, you can go ahead and invest in some of the world's most exciting startups. And I kind of just want to leave everybody with a really brief call to action if you're interested in getting involved. If you haven't already, definitely create your Dollar IRA and get things set up there. Similarly, once you've done that, you can go ahead and create an AngelList account to find some of those deals that you may be interested in. Once you've done that, you need to verify your accreditation status, which is a really important part of the AngelList process to ensure that we are meeting regulatory guidelines and ensuring the investors who are on the platform are sophisticated enough to invest. And finally, you can select your investment and actually transfer your funds. And just like that, you're able to set up your account on AngelList Venture and close into some of these deals. I'll turn it back over to Brendan here, but I can drop in a couple of links as it relates to these different steps in the process for those who are interested in getting started.
Thanks, and you drop that in the chat, John, and then Nick will reshare them to the general chat for us. And thanks for putting Rocket Dollar #1. We appreciate that, but why has John put that? Is I'm going to get in and just to do 2 minutes on IRAs. Is some things with IRAs can be a little bit slower than opening a general AngelList account. So if you try and focus on getting the Rocket Dollar stuff done very early on in the process, you're going to have better success. If you really wait all the way to the last minute to start your IRA, you might find a lot of frustration, or you might have trouble actually making the investment. And then you have to decide, am I going to make this with non-taxable dollars, or am I going to have, just give up on the investment completely, which is always a tough choice to make. Just a little bit on share, show. So I'm first going to go through our direct custody IRA, which most people new to IRAs, self-directed IRAs, are familiar with. And then I'm going to go through the checkbook IRA or IRA LLC and how that might work a little bit better for you on some parts of AngelList. So how does a direct custody IRA work? Rocket Dollar has launched this product. A lot of our competitors use this product. You open, and first you open start immediately trying to fund that IRA, and you try and submit some paperwork. So this is all in the first couple days after you sign up online. Yeah, signups online takes only about 6 minutes, but then you have to get investment docs from AngelList or your fund leader, GP. Once you've gotten those documents, you need to get them to our custodian partner. So we will get them sent for you so they can get reviewed. You also have to be working on a retirement transfer. Once that transfer comes over and the subdocs are reviewed, you'll be able to get your funds released into the AngelList investment. But just in those last couple minutes, there's a couple parties that need to be involved. You need to get documents from someone else. That could take some time if maybe someone doesn't see your email right away. You need to go get those documents reviewed, which if they're the standard AngelList documents, should go decently quickly, but maybe your fund is using different legal documentation. And retirement transfers can often be kind of slow. So, one from Fidelity or Schwab or Vanguard, usually decently fast. If you have an old 401k somewhere, this could be a real big challenge. So again, what are the big hang-up points here are things to keep in mind. The deal review needs to be initiated early to keep your process moving. If you forget about that and some communication doesn't get through to Rocket Dollar, let us know right away if you're investing on AngelList day one when you sign up for a Rocket Dollar account with direct custody. Because at the end of the process, our custodian partner must release the funds once they have the proper documentation. With lead time, we need at least 2 weeks. And that's, I would say, bare minimum. We want 2 weeks to process this type of direct custody IRA. Definitely try and open it earlier than that, 3 to 4 weeks. 4 weeks just to keep things safe and easy and sweat-free for you. A lot of our clients in California like this type of account because it does not have an LLC in it, like our checkbook IRA. Most people think like, well, why do I need an LLC in an IRA? And I'll get into that here in the next slide. So this is called our IRA LLC, also known as checkbook control or a checkbook IRA. And that's because if you look up at the top, you'll see a bank account as part of the process. So what is Rocket Dollar creating for you? We're creating an IRA, a Colorado LLC, and then a bank account. And we fund this IRA, your money moves through this IRA and basically sits in that bank account until you are ready to make an investment. You have total control over when you send money out from that bank account. So with great power comes a little bit more responsibility. You can't just shoot this off to anything. You have to be careful that you invest in an approved IRA investment. But for an AngelList, you can send this for initial funding of the investment or a capital call through an ACH or wire. And you can click that button and initiate that process. You don't have to talk to anyone else. You don't have to get approval from John's team. You do not have to get approval from Rocket Dollar. And you have to take a little bit more independent control of this, but that also means you can move quickly when you need to. So it's an independent managed account. Lead time. If you want to choose our more affordable account, definitely give us at least 3 weeks. You can choose our premium gold account and only take 2 weeks. But really, I would say, again, give yourself a full month to open this account. Even if you catch a whiff of, let's say you're one of Donna's LPs and you've liked investing with Donna before, and Donna kind of says, hey, you were talking in a call, she just brings it up, hey, in October, we're going to have a really great investment opportunity. I'm excited to talk to you about it. Just go and open this style of IRA right then, because to open an IRA, an LLC, and a bank account, there's just a couple parts of the process that if you have an extra week or two to do that smoothly, you can choose our more affordable silver account and you're going to be breathing easy. Because once you've gotten that work done, all subsequent deals and capital calls, instant. Donna says, hey, there's a capital call coming. It's coming next week. You have 10 days to complete it. You can hit boom on day 1 or 2. You can just send off the funds. They're already arriving on the AngelList platform to get processed into the fund. So here's again, just the two diagrams of how they work. The IRA LLC, we create this whole structure for you, and then you send the funds. With the direct custody account, everything on there must be approved ahead of time, and we must get the investment docs to approve that. So, who is this best for? A lot of people just say, Brendan, this was a lot. Just tell me what I need. Tell me what's best for me. That's obviously your decision, but here are some two easy ways to think about that. If you want to be a very active investor on AngelList, or things are coming up very time sensitive, I just say, take the time to learn what a checkbook IRA or IRA LLC is, and feel free to call our sales team if you have any questions, or look at our knowledge base to get up to speed on that account. I would say open it right away. Like once you feel like, hey, I might be investing next month, just open that account. It's going to give you a lot of power to choose which investment you want and to shoot off money immediately before deals close. If you are only interested in one deal and you just say, look, this is the only deal I'm ever going to do. I'm going to do Donna's fund, and I don't really invest in alts at all after that, especially if it's like a rolling fund. That's okay to do the direct custody. If you have a relative that, or yourself, you're a little bit intimidated, you're looking at this IRA LLC and you're saying, hey, it's really hard for me to understand. If you're just doing one deal, it's probably fine to do the direct custody. If you find it intimidating, but you still want to do a lot of deals in AngelList, I would say it's very much worth learning what the checkbook IRA is. It's going to pay dividends. It's going to be easier for Donna's fund, John's team, and it's going to be easier on you on headaches, because you won't have to keep reviewing documents every time you're excited about an investment. And if you're based in California, the direct custody can work well for you, because even though we use a Colorado LLC in our account, if you see in the diagram up here, California taxes any LLC $800 per year. They don't care what state that's in. It's called a franchise board tax fee. And that can be frustrating. So Donna, you have one of our solo 401ks. That's a whole other animal, but it works very similarly to this IRA LLC here, in that it has an entity, a trust, and then it has a bank account that you can shoot off money at any time. So choose the direct custody IRA if you're in California. Otherwise, you can look at a solo 401k like Donna has and has used successfully, because that also has this checkbook ability to shoot off investments. Okay. All right. And now I really want to get into the Q&A here, and I think, we'll start off, Donna, with you to get things kicked off, because you've been silent. We're really happy to have you as a guest today. And the reason I was really interested to have Donna on was something kind of organically. Is we have clients that invest in a lot of different assets. Florida and Texas tend to favor real estate. People in New York and kind of Seattle area tend to favor crypto. And of course, there's venture in San Francisco. But consistently, we just saw so many venture investments coming from around the Washington, D.C. area. And that kind of perked my ears up, because I just never really thought of that place as a kind of venture power engine. So Donna, could you tell us a little bit, what you've done with your own fund and why that's such a strong area of the country to invest and grow and work with other VCs?
Sure. Well, when we say Washington, D.C., I'm surprised people don't think about investing. It's not like there's anything else going on in this town. So, people think of DC as a political town. They don't really realize the magnitude of what exists in and around Washington, D.C. in terms of wealth and assets and capabilities. So just from a perspective standpoint, if you look at the 10 wealthiest counties in the United States, 4 of them are here in the Washington, D.C. area. It's actually 3 of the top 5, in fact, are in the Washington, D.C. area. There's an enormous amount of wealth in this community. And up until, 5, even 8 years ago, it really wasn't investing locally in funds. It was focusing a lot more on some of the, asset classes you talked about, real estate, et cetera. Fast forward to where we are today, if you look at the DC, what we call the Acela corridor, right? I can hop on a train and go from DC to Philly to New York to Boston in no time at all. That corridor actually does almost as much venture capital investing as the Bay Area. So, it's 85% of the amount that the Bay Area does. So there's just an enormous amount of activity that's happening here. And some of the biggest funds are headquartered here. NEA is dual headquartered here and on the West Coast. Revolution, Steve Case's fund, is here. Motley Fool's fund, Fool Capital, is here. There's just an enormous amount of firms and funds that are doing investing. And if we look at the sectors of the economy where there's all kinds of opportunity to create massively scalable companies, things that touch the government, things that are government related, it is the lion's share of the GDP. So there's just an enormous amount of untapped opportunity. So, while we are located in the DC area, we don't just invest here, though many of our LPs are here. We invest, my first fund invested globally. The current fund that I'm running invests in North America. But, the DC area has really come into its own in the last, sort of 5 to 8 years in terms of just capital being mobilized.
Mm-hmm. Great, thank you. That really paints a picture, because I think something on these webinars I always push our partners or anyone who is a guest is like, tell us like what's really the power of your regional area and why. Because I think like people can get very siloed. We obviously have tons of communication, but like this is stuff, you just hear when you're out with friends or work friends, or you do a networking coffee meeting, and you're like, wow, I never knew so much opportunity and talent was flowing through this investment market. And so, Donna, we got a question Q&A. I'll delay it just one more question, because I want to hear from you. Do you use a rolling fund at AngelList, or do you use some of those more static ending funds when you use the platform?
So I do a number of things. So I do angel investing directly. So I've encouraged startups that I'm working with that are super early stage to put their own deals together through the AngelList platform, some of the tools that are now available for founders to run their own deals. Mm-hmm. I invest in syndicates that other people run. So personally move capital from my Rocket Dollar account over to AngelList and deploy that really quickly. But we, Builders and Backers, we operate our entire venture capital fund as a rolling fund on AngelList. And it's this beautiful ecosystem where there's investors and startups and funds and syndicates. And this is the part where geographic area starts to matter less, because I get access to this digital community where there's just deals left and right and really interesting things that we get to see. And, when we think about the magnitude of what's possible, like people don't really recognize that, AngelList was involved in over half of the top tier VC deals last year. Like, mm-hmm. You want to be in a top tier deal, odds are it's happening on AngelList. So, we like being there for the community. We like the structure of the rolling fund and the flexibility that it offers. And AngelList makes it easy for us to run that fund because they take care of all of our back office for us. So each quarter when we get new investors and we process deals, it's as simple as me sending emails to our support team, and magic happens behind the scenes, but I'm sure that we're legally compliant and all the paperwork is being taken care of, and easy ways to communicate with my LPs. So we've had a really great experience with that.
Great. Thank you, Donna. And I think, the regionality or clickiness of alternative investing, that's something our newer clients struggle with, so they might know like a specific area. They came to us because they're good at real estate, or maybe they're on a crypto group of like trusted people. And they're like, well, I'm trying to break into this one, like VC investing, and I just feel totally intimidated. I have no connections. I have no one to like get me in the room, so to speak. So that's when these online platforms, like, feel free to get involved in that, in the social aspect a little bit more. And if you are a Rocket Dollar client kind of listening in or on the recording, definitely take advantage of like an online community like AngelList. Like, what facets can you touch on, or some of the more social aspects that might unlock a deal for you that you frankly did not have access to. And if you become a more close personal contact, you might just be a stranger the first reach out, but by next 6 months or next year, you might be hearing first as something really cool is coming down the pipeline.
Yeah, and one other thing I would just offer too is, if you think about the traditional fund structure, oftentimes the minimum investment that you need to be able to participate in a traditional venture fund is quite high. So if you're new to venture investing, syndicates and rolling funds are a really good vehicle, because oftentimes those minimums are in some cases, a couple $1,000s to invest. So you can really dip a toe in super easily if this is a new asset class for you.
Yeah, and we just added at customer request on our partners page, we added like a minimum investment level of all the issuers that we work with. And like AngelList is up there now, but like a big one new clients ask about is like the investment minimums and then accreditation, because it's just an access frustration. They're really interested in this space. They might have an IRA that has, maybe it's $20,000 in it, and they brought us like 6,000. And they really want to get into this opportunity. So definitely look at some of those, some of those funds, explore. And, what can Donna and John, can you explain like what about a rolling fund makes that a little bit more accessible compared to like a closed-end fund that has like a time end date?
Yeah, happy to take a stab at it. And then
Yeah.
Donna, feel free to jump in if you want to add anything from your perspective. But I think one important thing to distinguish between different types of deals on AngelList is there's something called a 506B legal structure, and then a 506C legal structure. Without getting into too many of the intricate details, the distinguishing factor between these is if it's a 506C deal, it can be what is called generally solicited to the public. And so what this allows us to do is that page that I actually showed while walking through the demo, those are funds that are structured as a 506C deal. And in many of these cases, you don't actually need to know the GP who's leading the fund to invest or apply to that specific rolling fund. And so that's one of the benefits, I think, of this rolling fund structure, is by the very nature of how they are created, they're public. And so individuals like whoever's on the call here today can get involved from the very beginning without having to know somebody personally to find like a syndicate or a specific deal that's going on privately.
Yeah, I agree with that. I also think the flexibility of the rolling funds. So rolling funds from an LP perspective operate like sort of like a subscription. So quarterly capital calls, you decide what the amount is that you're comfortable with each quarter. It becomes predictable, which oftentimes is not the case if you're investing in a big sort of standard VC fund. It's not uncommon in a standard VC fund to get random capital calls coming at you out of the blue when you're scrambling for pulling those dollars together. With rolling funds, it's predictable like clockwork. Every quarter, you know how much, you know when. It's all automated. You can just click and go. And from our perspective, we love that the public nature and also the low dollar minimums, because we want to try to democratize access to investing in these vehicles. And a lot of times these VC funds are sort of back room. You have to know somebody to be in the fund. And this is how wealth gets created oftentimes, is by being in early in these kinds of hyper growth companies. So we want to make that accessible to everyone and anyone that would be a qualified accredited investor and able to deploy capital.
Thank you, Donna, and thank you, John. I think, and that again, for the clients and the investors to understand, is like access of capital and how many investors a fund is dealing with, like really changes the equation. Usually the minimum is not, it's not like a mean thing to be like, we don't want you. It's more just how much work is happening on the back end. So, a rolling fund, if this is consistently, these checks coming in, like Donna's saying, it's more expected. The efforts in fundraising might not be as intense. It's okay to take on that smaller investor. Using AngelList, it makes some of this back end stuff so much easier to do. They can take $3,000, $5,000 investors. They can take 40 of them with a much lower pull, on the fundraising team, compared to if they were doing it all on their own. So a lot of times the minimums about access and just administration is they can't break their back office team. And then the AngelList team is helping out to make that a much easier process. So Donna, we had a fun question. We won't name any names, but I did kind of want to address it because it leads into a second question we got. Why did, Donna, someone asked you directly, why did you choose Rocket Dollar over some of the other competitors that had self-directed IRAs? And I believe you opened a solo 401k with us, correct?
I did, though I used to have a self-directed IRA with a different company that, as you said, we won't name names. And I made some of my earlier angel investments through that organization and that group. So a couple of things that I thought were unique and very compelling about Rocket Dollar. I like the checkbook control. I like not having to go through the custodian structure. I did not find the custodian structure work for me because I want to make investments quickly. I want to be in deals before they disappear. I want to be able to see the deal today, make a commitment today, and have the funds wired within a couple of days to make that happen. And I didn't see that was the case with the other provider that I was with. Everything's online. Rocket Dollar is always super helpful with email support. And if you're like me, where you just don't have time to sit on the telephone and talk to a human and wait on hold, being able to do these things while you are doing other things and multitasks, super helpful. And I actually felt like listening to your presentation about setting up the Rocket Dollar account, it actually sounded scarier and more difficult than it actually was, because when I signed up, it was, sign up online. I had a lot of help via email from the support team getting set up. Documents were sent. I needed to just sign. Bank account instructions were sent. Like it took time to take care of those tasks, but it was not difficult at all to get done. And I think that's one of the big things is whenever I've, needed urgent support, needed to get something done quickly, it seems like the team at Rocket Dollar understands the nature of the kinds of assets that we're trying to invest in, and oftentimes the urgency that comes with those things.
Yeah, thank you, Donna. And that's explaining kind of like why a client is in the checkbook. Oftentimes a client will shy away from it because they're too intimidated right at the beginning. So they go, whoa, this is a lot. And then they go for the direct custody. And let's say like a deal is closing in let's say like 8 or 9 days, and you have a direct custody IRA. John's team and the Rocket Dollar team and your GP, everyone's moving to try and get you in. But there's just, it's 3 parties all trying to work together. And, 3 balls just got thrown up in the air, and all 3 of us are trying to catch them. And that's just, if one team of ours is a little bit busy, let's say a couple of days go by, we don't want to lose that for you and have you lose out on the investment. So if you do open that direct custody, just be really proactive to get it ready ahead of time. If you are ready to take the plunge on the checkbook account, please do and ask us about it. And I think we had some client asked about, some other regulations about the checkbook IRA. It's been a very powerful tool for a long time. It has been looked at in a few rulings, and usually those are about prohibited transactions. And when it comes to a prohibited transaction, a big one, another one came up the Q&A, like, can I invest into my own deal with a Rocket Dollar account? Those are the rules that you have to be a little bit more aware of with a checkbook account, because you're kind of on your own. You're doing things, you're managing your own IRA, you're sending money to investments. When you have a checkbook account, you need to know that you can't invest in your own deals. You cannot invest in a few limited things, like you can't keep like precious metals at home. That's one that's come up again. But it's kind of like get a little apprehension from people who just aren't used to it. I would say if you're willing to learn a little bit of those rules, you're going to be just fine. If you're not investing into your own deals or your spouse's deals, you're probably going to be just fine. And we're always happy at the Rocket Dollar team to look through our resources and direct you to stuff if you are intimidated by that. Okay. John, I want to ask you just about your back-end process. When it comes to an IRA, what are some of the biggest challenges that your team has seen that could kind of hold up a deal or maybe stop it being done completely from an IRA?
Yeah, certainly. I think you touched on this a little bit, but if we look at a traditional custodian IRA, there's a lot of parties that are involved. There's the GP, there's the LP, and then there's the custodian themselves. And one of the challenges with coordinating between all of these different parties is timing as it relates to a deal. So in the event that you're like a really active investor, you're looking to complete like multiple deals on the platform, maybe you're interested in really time sensitive deals that are closing within that short window that you really need to get into, or potentially if you're involved with a rolling fund, it can create a challenge in getting all of the coordination to take place between each of these different parties. So by opting for this checkbook IRA approach, it really does simplify by giving control to you as the owner of the checkbook IRA. And that's one of the areas that we've seen pretty significant value come to light, is because rather than having to get approval on each and every deal that takes place to release funds, you end up only needing to have that approval from yourself via the LLC or the investment vehicle. And I think that piece of it is really critical just to understand, especially if we think about a rolling fund. You're essentially subscribing for multiple quarters. I think of it sort of like a Netflix account where you're subscribing, you have that reoccurring payment taking place. Now, if this is a custodian IRA, you actually need to go through that approval process each quarter that this funds roll over. And so that creates a challenge, both from your lens, from AngelList perspective, and likely from the custodian as well. So leveraging something like a Rocket Dollar account can simplify and streamline that process really from end to end.
Thank you, John. And we have a bunch of audience questions. So I'm going to try and run through some of these because I know the audience is just asking. We want to make sure we address those. So Ronnie asked, is there any distinction between a regular, what most people call traditional IRA versus a Roth IRA for source of funds? Really, AngelList does not care what type of IRA is coming to them. All they care is that the money shows up and it gets into the fund. So if you have that question, if you're unsure between a traditional and Roth, ask Rocket Dollar. We are not financial advisors, but we can definitely give some educational basics of what would work for you with your current retirement funds you have available. A lot of startup investors like to use a Roth IRA because if you invest in a Roth IRA and you invest in AngelList, and let's say you get lucky and that startup just pops like crazy, you hit like a unicorn, there is no taxes paid on a Roth IRA in the future. Even if it grows to a big crazy amount, $500,000, $1 million, $5 million, you can take out of that account and you can continue to withdraw from that account without paying taxes. Now, if you get a big explosive investment into a traditional IRA, you will still pay taxes, but you'll only pay taxes on what you withdraw. So most of our older clients, they're not withdrawing $200,000 a year from a traditional IRA. They're withdrawing maybe, $5,000, $6,000, maybe $20,000, $30,000 if they're, if that's like the only place they're drawing income from. So, think like in retirement, your house is paid off. Maybe you're living on $100,000 per year. That's all you need to draw from your IRAs is to supplement any income you currently have. So our traditional IRA clients, they're paying income taxes. They are not paying capital gains taxes, and Roth IRA investors are not paying it as well. So someone also asked about carried interest fees paid when investing with a self-directed IRA. Are they paid from the IRA account? So any AngelList or fund fees would be paid by the IRA. I don't know a ton about carried interest. So Donna and John, if you know more about that, I'll let you comment on it. But if there is a fee that comes, that'll be paid through the IRA. When you're talking about a Rocket Dollar fee, we pay that with a credit card. So when Donna has her solo 401k, she pays for our Rocket Dollar account membership with a credit card. And then if she goes and invests in something and that investment has a fee, that comes from her solo 401k balance. Any commentary on carried interest, Donna and John? I didn't know if that was relevant to funds on AngelList.
I think from the AngelList perspective, you covered most of it. It'll depend on the structure of the deal that you're closing into and how, if you are a recipient of carry, generally there aren't fees associated with it. But if you have any specific questions on that in particular, feel free to reach out. It's just invest@angel.co. And we can actually dive into details to understand some more of the logistics around things.
Okay.
I would just add to that, if you look on the rolling funds page that I think was shared earlier, where you can see some of the rolling funds that are out there, you'll notice they vary in terms of the fees and the carry levels that you will end up paying. So there is a pretty good deal of variability in those things. And the full amount of that is deducted from your investment when you invest, and it's held in escrow over the life of that investment. So it basically allows us not to have to come back to you later for those fees for investments that you have made. And this is another great benefit of doing this on AngelList is the platform and the technology and the team track all of that. You have access to it. I have access to it. It's very transparent in terms of everybody seeing exactly what was contributed and what went to fees, and what that looks like over the life of your investment.
Yeah, and that simplicity again, we sometimes have clients being like, why would I work with this platform or whatever? And a lot of it is time and simplicity is just such a huge benefit to people that are doing, Donna's we look at your resume, Donna, you got a very busy resume. You got a lot of stuff that you're doing. Time saved is money, that gives you more time to go out and invest and look at opportunities. We have a lot of questions about the solo 401k coming in. I can't get to all of them. You can feel free to email us to check if you qualify for a solo 401k after the call. But the reason a lot of our clients go for a solo 401k is they are self-employed. So they might have a small business, or they might have a consulting gig, or their spouse is employed at a small business. And then they also do a little bit of work at their spouse's business. So the solo 401k is the government's answer to many small business owners saying, hey, I see this really great corporate 401k plan that my friends have. Why don't I have a solid retirement plan just like they do? So basically, it can contribute a lot more than an IRA. It can contribute up to $20,000 without thinking too hard. If you really think a lot harder, you can contribute even more, sometimes up to over $50,000 or $60,000, depending on your age. And when we set one up for someone at Rocket Dollar, we give them their plan document, we establish a retirement trust, and then we set up bank accounts. And you can call our team and ask about this, but you can think of that retirement trust. It's almost like the Colorado LLC. You're in charge of it. You get to decide where it goes. You're the administrator. You're the trustee of the plan. So you get to say, hey, I have a lot of money in the solo 401k. I'm going to contribute this. And then I'm going to send it off to AngelList and to the Builders and Backers Fund. And you get that same ability to shoot off funds immediately. And all you do on AngelList is, instead of putting an LLC entity into AngelList's entity signup, you'd be putting your trust name into the entity signup page. And once that trust is there, then you just send off a bank ACH or a wire. And Donna, I know you have a solo 401k as well. Why did you choose that over an IRA?
Yeah, I mean, I think you nailed it. If you think about the amount that you can contribute, for me, this was about being able to put capital to work into investments. I can make the employee contribution up to, I think it's 20,000 something. And then on top of that, the small business that I'm self-employed by can also contribute up to 25% of profits into that account. So up to, I think, like $50,000 or $60,000. And then on top of that, if you're nearing retirement, you get to do the over 50 catch up as well for another 6,500. So, you're starting to put some really serious money to work each year. And by the way, that employer contribution helps with the income that your small business is reporting on its taxes, because you get that deduction for the employer portion. So there's just a lot of benefits if you're self-employed. And that doesn't have to necessarily be your full-time thing. It can be, freelance and gig work. And for a lot of people who are a little bit further along in their career, sometimes they do one-off consulting and things like that. And just, have a LLC or a small business they hang a shingle out from. So it's a really convenient, easy way to offset that consulting income with the tax deduction and get both the employee and the employer contribution component.
Mhm. Yeah, and I would say the solo 401k, again, it has our highest learning curve, but it pays the most dividends to our clients that really work hard on learning about it. So we talked about investment minimums. We get a lot of, frustrations about investment minimums, and that, because they say like, I'm a little behind. My IRA is small. And then we have someone start a solo 401k with us. They're already meeting these investment minimums because they're able to save really effectively. And this is not just for people who are, some of our clients have a corporate job and then they do a side business as well. So their normal job is W-2. They have like a 401k plan with Fidelity that they love there. Maybe they get an employer match there, but then they pay all the taxes on their side business, like Donna said, some side consulting. This can be a great way to defer that. And you can actually use the corporate Fidelity plan and use the Rocket Dollar Solo 401k at the same time. And you can call our team if you're trying to figure out how you juggle those two things at the same
Yeah,
time.
and just to add to that, I mean, that is exactly the situation that I have. And it's actually, once you understand how to move money between the accounts, it's very simple to do. You just need to plan for a few days lag time for capital moving from one thing to the other. So it allows you to really take charge of how you want to deploy your dollars and how much you want to put into the public markets versus these alternative vehicles. And balance your portfolio. How much of your total investment portfolio do you want in alternative assets?
Great. And Donnie, we will share this because we have a couple of people asking. They would love to get in touch with you. And also, John, can we share both of your emails in the chat? Nick will repost those. You have the invest at AngelList.co, I believe, John. And
yeah, I would say invest at angel.co.
Got it. All right, and feel free to keep firing Q&A here. We have 5 minutes left. All right, and I'll help Donna answer this one, but thank you. We have an anonymous person who've asked a bunch of questions. We're just saying we appreciate you. Donna, do you file additional tax forms because you have a solo 401k? So there is one tax form for the solo 401k that the government allows you to basically not file it as long as you're below $250,000 in assets. It is called the Form 5500. And the solo 401k gets to file a shorter version that, if you have a friend that works in HR or they're CEO of a company, they'll sometimes have to do this when they work on their work benefits with a benefits advisor. So if you're over $250,000 in assets, you do have to file that form every year. Rocket Dollar helps our gold clients do that. We do not become their tax advisor, but we give them assistance to fill out the form correctly and send that into the IRS electronically. Our silver clients, if they are over $250,000 in assets, they work with a CPA privately, or some of our clients are really self-starters. They just fill it out all themselves, and they send in that filing. All right. Please feel free to keep questions coming here. John, you've had the benefit of working with so many different GPs. What would you say are some of the biggest challenges or complaints that GPs are coming to you, like before they get to AngelList or right when they start working with you?
It's a really good question, and it's a pretty wide-ranging answer. What probably the main reason that GPs come to AngelList is because we're really the only end-to-end solution, providing all of the different services that we outlined earlier, whether it's administrative, legal, tax, or compliance. We're really the only platform that offers that entire suite. There may be other fund administrators that provide pieces of this process, but they may outsource elements of it. And so that's one of the primary reasons that I think GPs come to work with AngelList is because of just that. The other component, which Donna touched on earlier, is there's over, I think it's 57% of the top tier VC deals in the US take place on AngelList. That's a pretty staggering number if you really think about it. And that's led to, I want to say the latest number is over 190 unicorns that have actually been funded via AngelList. And so when you think of all three of those components, it really is an exciting, I think, company to be a part of. And I also think, maybe a little biased here, but there's a pretty strong community around AngelList as well, which I know a lot of our GPs love.
Yeah, and the Rocket Dollar clients have been asking us for a long time. They're saying, please, please, we really want you guys to work with AngelList and get us nice instructions for that. So we do have a details page that you can look at, the Rocket Dollar Partners page, and then you can see AngelList instructions that'll kind of like help you along this journey. We're going to be adding this webinar up there, and also some of the slides here from today. And this will also be on YouTube as well. So if you have anyone else that you'd like to share this recording with, please do. Please send it out, or you can call and follow up with one of us individually after. We're all open books. You can use those emails below to get in touch. And then there's the AngelList discount code for Rocket Dollar. We always offer $50 off for anyone who's coming in through a partnership like AngelList. Just use the code AngelList if you're looking at a new Rocket Dollar account. This is last call for Q&A. We're kind of right at the bell here, but there's a few last questions that have come up. Someone asked about UBIT. UBIT is a really complex thing. I'm not going to go entirely on this call, but it's kind of like the one boogeyman tax you can get hit with in a self-directed IRA. It's like everyone's totally tax-free. They're loving it. And then they meet with their CPA. The CPA is like, you're going to get hit with unrealized business income tax. And it's just something to think ahead on and think, hey, will my investment have UBIT in it? Generally, passive investors are not subject to UBIT. That's not 100% of the time, but generally, if you're passive, you are not very likely to be hit by a UBIT. If you are a more active investor investing in a deal, you should be more concerned about UBIT. We have a CPA that we could recommend to you. If you're investing in a lot of debt, like debt-heavy investments, you could potentially get hit with UBIT. It's a good chance to hit up the Rocket Dollar team. We can send you a CPA to look over a deal. And the solo 401k, we've had a few questions about that. It is exempt from one of the biggest types of UBIT that can hit an IRA. So some of our clients will have, they'll be investing for many years and they get hit with UBIT and they're like, that left a really bad taste in my mouth. That was a tax that I wasn't expecting or I wasn't prepared for. And so some of our clients will open a solo 401k purely because that gives them extra peace of mind. It has another protection against UBIT, even unlikely in their investment style, just the possible threat of it or the complication makes it frustrating. So they go for the solo 401k. And I would say UBIT is something to be aware of, not afraid of. Please feel free to follow up with the Rocket Dollar team and we can always connect you to a professional. And especially if you're doing a really big investment, that's where to check if it has a UBIT impact ahead of time. If you're doing a small passive investment, you probably don't have to worry about that nearly as much, but please be sure to visit a tax advisor. We could recommend one to you if you're having some trouble there. Nick, I saw you were cleaning up a few questions. Was there any burning one that we need to address?
I just answered one about having minor accounts on self-directed IRAs, but there was one earlier who was asking about investing in their own deal. I think we can have a little bit of attention on that one.
And yeah, this will be our last question. But again, if you are closely connected to a deal on AngelList, like I'd say very close, if you're involved with the management or if you're family related to the management, definitely call the Rocket Dollar team to review the rules. Experienced Rocket Dollar investors usually never invest in their own deals unless you own less than 10% of the company. If you own less than 10%, it's generally a green light, as long as you're not the CEO. If you're CEO, it's usually always pretty risky to invest. If you own between 11% to 49% of an opportunity, that's where you have to be careful. Am I a very close business partner of this? Who leads the fund? Do I do other deals with them? You should probably check with a lawyer beforehand. Am I related to someone on the management team? And now I'm investing a really sizable sum into a fund or opportunity. You should definitely check on that. If you own over 50% of an opportunity, or if you're the CEO, you should almost never invest, because really that brings a lot of risks to what's called prohibited transactions. And that could just bring extra audit attention to your IRA. And if the IRS does find about violation, they could invalidate your entire IRA. So if you're just a passive investor and you don't know anyone you're ever invested, you're kind of separated personally from the investment that you're doing, other than obviously checking on them, you don't need to worry about prohibited transaction rules as much. If you're very tight in the VC community, you've done lots of deals, if you're related to anyone, definitely feel free to give Rocket Dollar a call. We can go over the basic rules. If you do have a complex situation, we can refer you to a lawyer that can really parse that out for you. Okay. John, I'm going to let you go first on closing comments here.
Yeah, thank you guys for all taking the time out of your day to listen to this conversation. Really excited for everybody. If you're looking to get involved with AngelList, feel free to reach out to either my email or to invest@angel.co. And we're happy to set you up with any questions that you might see. But again, thank you to the Rocket Dollar team and to Donna for joining the call. And I'll hand it over to Donna.
Thanks, John. I shared my email and my LinkedIn profile in the chat. If I can answer questions directly about how this works from a customer or a fund manager, an LP, GP perspective, I've got all of those viewpoints from my own personal experience, and I'm happy to be a resource for you and have shared more information about us. If you're interested in getting started in investing or want to see what a real live rolling fund looks like, the link is in the chat. But thanks for having me. And thanks to the Rocket Dollar team and the AngelList team for really doing this work to help unlock angel investing and startup investing and alternative assets to more people across the world. So appreciate the work y'all are doing.
All right. Thank you, everyone. And yes, that's our mission, is to make some of these alternative investments much more accessible. And we really appreciate bringing out AngelList and Donna today to talk about that. All right. Thank you, everyone. And thank you, Nick. You can kill the recording here. We'll wait for the audio.